Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bullish scenario on the medium time frame where we're looking for an impulsive structure to the upside, and as long as this low at 40.6k is not taken, this is the preferred bullish scenario. Here we are looking for a wave 4 to finish in between the 0.236 and the 0.5 Fibonacci between 41.2k and 35.9k, and as you can see, price has already hit this area once. Time wise, we are doing good. This is a Fib time over here on the chart, taken from the high of 1 to the low of 2 to the high of 3 to compare 2 in time with 4 in time, and we are currently ranging between the 2 and 3 Fib time, which is fine for this wave 4. We don't really like to see this wave 4 going all the way to the 5 Fib time, which is on the 1st of February 2024. If price takes this low, then there are two alternative bullish scenarios that I at least keep an eye on. The first one, and I just shortly want to show them, is this one here, where we are looking for a 5-wave impulsive structure where we get a bigger and longer wave 4, where preferably this wave 4 ends after the 382, which is the 8th of March 2024. And then we also have a double 1-2. Looking at a finish wave 1, finish 2, finish 1, and then we look for a wave 2 here, common target 05 to the 786, taken from the low to the high that we have at the moment, giving us a target area between 37k and 30k, preferably ending after the 382 Fib time, taken from the same pivots, which is on the 27th of February 2024. But for now, as price has not taken this low, this remains the preferred bullish scenario. And if we then zoom in to this bullish scenario, then here we are looking for a flat to the downside where wave C is finished. 3-wave A, complex structure in a wave B, and a 5-wave impulsive structure to the downside in a wave C. Most common target for your wave B is between a 1.236 and a 1.38, taken from the high to the low of A, which is nicely respected. As you can see, a wick is no problemo, and now we are looking for a move towards the upside, where on the lower time frames we are looking for this diagonal. This diagonal follows all the rules of a leading diagonal. We then have a 1, 2, 3, 4, 5 wave structure that finishes wave 1. Then we have our wave 2 target area over here, which at the moment is nicely respected. Most common target, taken from the low to the high of 1, is between the 0.5 and the 786. And you can see price bouncing on the golden pocket. Very common target for a wave 2. And then of course we like to see a wave 3 to the upside and price moving towards at least preferably the 1.618 at 45.4k. We do have some resistance above that level as well. A wave 3 can be very extended, and we have the blue box here between 45.9k and 46.7k. However, if price is going to take this high, probabilities in general will increase for price to move to this 1.618 because of the daily gap that we have over here. So on the daily chart, we have this candle, then a big move to the downside, and the second candle, and this created a gap on the daily chart. This gap has been tested once over here, twice, right? And if we then move up once again, and especially if we take the high of this range, probabilities really increase for price to fill this gap to the upside, which then means moving to 45.5k, which of course is very close to the resistance box that I just mentioned as well. If we go to the bearish scenario on the daily chart here, then we are looking at a finished ABC zigzag to the upside. In this scenario, wave B retraced to the 0.382 Fibonacci, taken from the low to the high of A, which is a more common target for a wave B, a little bit more rare for a wave 2, I should say less common for a wave 2. And your target area for wave C is between the 1 over here and the 1.618 trend-based Fib extension, taken from the low to the high of A to the low of B, which is where price is ranging now. Of course, if price takes this low, I mean that would be a minimum requirement for this scenario, it opens the door for this scenario, of course, as then we are looking for an impulsive structure to the downside for much lower prices. But remember, the moment the 40.6k low is taken, it also immediately increases the probabilities of these two bullish scenarios. So basically, when that low is taken, we don't yet know in what kind of market structure we're going to be. We don't yet know if we're in a C, in a double 1-2 here, or eventually a 3, 4, and a wave 5. That really depends on the market structure we get after price takes that low. Here more locally, we are then looking in the bearish scenario for the high to be in, which is of course the invalidation for these scenarios, and we are looking for a wave 1 or A, 2 or B, and then a wave 3 or C to the downside. If price makes a new low, then this 1 or A is going to move to the right side here, and then we're going to be looking for still a retracement to the upside. Currently, if you take the fibs from the high to the low, then you can see the 0.236 has been hit, but this is a rare target for both the wave 2 and the wave B. The common target for B is the 382 to the 886 with a minimum target of 44.3k, and the common target for wave 2 is the 05786, which is between 45.3k and 47.5k. So in both of these scenarios, you prefer price to move to the upside. Of course, if price makes another low, the fibs will move to the downside as well, but we still expect quite a move to the upside, and not to forget, we still have that daily gap. So even if we move down and move up, the moment we enter this daily gap again and take this high, probabilities are higher to move to the upside to at least 45.5k. Now the most bearish scenario, where you then would make another low to the downside, where 1 or A is going to move to the right side over here, right, would be an impulse to the downside. 1, 2, 3, sideways, 4, 5. Preferably, this is your high of 4. The moment that price makes another high, it really lowers the probabilities that this range is a wave 4. On the 30-minute chart over here, currently this wave 4 is made before the fib time, which is taken from the low of 1 to the high of 2 and then put on the low of 3 to compare 2 in time with wave 4 in time. This is your common target area for wave 4, which is respected. Invalidation is the 44.4k level, the 618, and you want to see this low taken. However, when we look at this wave 5 to the downside, it takes a lot of time. If wave 3 is extended, wave 1 and wave 5 tend to have a price and a time relationship. When we look at this wave 5 here, it's already taking a very, very long time compared to this wave 1, which does lower the probabilities for this wave 5. If we at least talk about the target for a wave 5, then the 1.236 to the 1.618 is a common target taken from the low of 3 to the high of wave 4, which is between 40.9 and 40.1k, where we have a couple of lows as well. And below this level, we have the golden box here, which is sitting between 38.6k and 39k. If we look at more local bearish structures here, right, this is for a wave 4, where we then finish wave 4 and we look for a move to the downside. The only way that I can correctively count this structure is an ABC, where we have a wave A and B finished, and your wave C is a very big and long ending diagonal. Wave 1 is a double zigzag, ABC, flat, ABC. Wave 2 is also a double zigzag over here, another WXY. Wave 3 is a simple zigzag, 4, simple zigzag, 5, simple zigzag, ending wave C in the common target area for your wave C, which is between the 1 and the 1.236, taken from the low to the high of A to the low of wave B, where of course the invalidation is this high if price moves towards the upside. The thing that is not nice, which you can clearly see here, is that this wave C is incredibly long compared to your wave A. It is 22 times longer on the 30-minute chart compared to wave A, which lowers the probabilities for this particular scenario. Now in this scenario, of course, as the invalidation is here, preferably price is not going to move above this resistance box here, which is kind of like the last good area of resistance before the high between 43k and 43.1k. The only bit of resistance that you have left above this blue box over here, where you can see we also have the value area high of this range inside the blue box, is this support resistance area that we have over here. Acted as support, then resistance, 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 resistance. So it is definitely a level to at least keep in mind, 43.2k to 43.4k. If we look at the CVD divergences, actually quite nice in confluence with this range, because we had a bit of a deviation, and as price moved to the upside here, there were some bullish CVDs to be seen, right? That was the start, where eventually price overnight for me started ranging, and eventually there it started to create more bullish CVD divergences. Yesterday, this was what I saw on the 3-minute chart, price moving to the upside, the first sign of a little bit of a support with some bullish CVD divergences here on the 3-minute, and of course we want to continue to observe that. And if price gets a retracement or it eventually starts ranging, we of course want to see this bullish CVDs continuing. This bearish CVD is very, very close to being invalidated if price takes this high over here, right? Which also increases the probabilities to move to this box here. So if we then look at the probabilities of the different scenarios, then at the moment on the medium time frame, the probabilities are still bullish for new highs. As long as the 40.6k low isn't taken, there is no reason to switch. The high is also a bit of a weird structure to the upside, like the last move that created the high. On the low time frame, when we talk about this range here, then the probabilities from an Elliott Wave point of view are also bullish, where a corrective A, B, C here has an incredibly long C, which lowers the probabilities for that scenario. Wave 5, if we're looking for a 4 finished and a 5 to the downside, wave 5 is taking a very long time compared to wave 1. We don't like this to still be a wave 4 over here. We want 4 to be finished. We don't like this part to still be part of a wave 4, because then it is at least 5 or 6 times longer than wave 2, which really lowers the probabilities for a wave 4. And something that is important is that we do get more confirmation for price to move to the upside if it can take the range high. Of course, we have to keep in mind a potential swing failure pattern, right? But we have the daily gap to the upside, and testing it for the 3rd time really increases probabilities as well to move towards the upside. The alternative low time frame scenario here is price taking the lows for a 5 or potentially a B, and then we move towards the upside once again to still look for a bigger retracement to the upside, where in general I'd still be looking to fill that daily gap. So in both cases we are looking for higher prices. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.